G'day, today I'm going to show you how to do a profit and loss statement and a balance sheet from the 2014 end of year exam. This is what you'll be confronted with. It's the trial balance and the additional information from which you have to do a whole series of balance day adjustments in your general journal. The way I'm going to set this out is I have copied all the additional information there first. I'm going to do all my general journal entries first. This is something that I think it's important that you do as a normal procedure on your pink sheet or any sheet of paper, and from then I'm going to adjust the trial balance which I have put on here on this part of my spreadsheet, and I'll show you that process before I then complete my income statement and balance sheet. So let's get started. Here I have a physical stock take to account for. It says that we've got 10,000 on hand, so I need to go back to my trial balance and see what the current balance is. It says here inventory $10,800, so we've actually got a loss of $800. So what I've got to put in here is an account called inventory adjustment, and the credit goes to inventories control account. This credit here for $800 will reduce the amount to $10,000, what the actual stock take says, and adjust our records. So that one's been ticked off. The provision for doubtful debts should be $1,500. In order to make an adjusting entry, I have to work out what the current balance is. So again, I need to go back to my trial balance, and here it is here. Provision for doubtful debts is $2,000, so it needs to be reduced to $1,500. So in order to reduce a provision for doubtful debts which has got a credit balance in it by $500, I need to debit that account. So let me just type that in. Provision for doubtful debts. That's going to be debit for $500, and the credit amount goes to bad debts expense account. There we are, $500. The next adjustment on the 30th of June 2014, $500 worth of wages are owed. So it's something that hasn't yet been paid. It's an accrued expense. So it's wages, debit, $500, and credit to accrued expense of $500, and that's a current liability. I've got to remember to put that into my current liabilities in my balance sheet. I'll talk about that in a moment. The next entry is insurance expense. Was paid on the 1st of January 2014, is paid for 12 months. Our balance date is on the 30th of June, therefore 6 months of that is being prepaid. Therefore I have to enter an entry called prepaid expense, and that is for half that amount. So I've got to find out exactly what that amount is. So I need to refer to my insurance. There it is there, $1,500. So half of that is $750. I beg your pardon, what am I doing? $750, and I have to credit the insurance account for that amount. So what that means is that we've only used $750 of the insurance. Now we're going to do the depreciation entry. What we need to find out is the diminished balance of the delivery van. So let's have a look at the trial balance for that. On the trial balance, we'll find that the delivery van's worth $30,000 and the accumulated depreciation of the delivery van's $10,000. So we've got to take away the $10,000 from the $30,000 and get $20,000, and $20,000 multiplied by the 15%, and you're going to get 3,000. So when you multiply that by that, in here, remember we've got to do 15%, we have $3,000 for depreciation and $3,000 for accumulated depreciation. Now for fixtures and fittings we have to do another depreciation entry, but this time because we've been given the residual value. That gives us a clue that we have to use a straight line method. I have to find out what the fixtures and fittings value, the cost value of that is. I need to go refer to the trial balance. Up here we will see that fixtures and fittings, if I spell it right, is $5,000. From that we take away the 1,000 to get 4,000. So $4,000 is meant to be depreciated over 4 years. Divide that by 4, and we're obviously going to get $1,000. So $1,000 needs to be depreciated for furniture and fittings every year. Okay, so what I've done is all those entries now. For this last entry, to clear the GST entries, I'm going to show you a shortcut rather than showing you the general journal entries, which is going to be a lot quicker in the context of you doing this question. So what I normally do is go to my trial balance, and you can see here GST collected has already been changed to GST clearing. That's part of my process. What I do, I'm going to just get rid of this line here. So GST clearing, that $4,000, I'm going to get rid of, and I'm going to net that off against the GST collected to make that $2,000. Right? So all I've done is taken away the GST collected, credits received, and put it against the collected, and that means I've got $2,000 remaining clearing, and that is a current liability which I'll deal with later. So you can see that we still balance, but what I need to do now, importantly, is to make sure that all these other entries are entered into the trial balance to come up with a final adjusted trial balance. So let's go and do that. Inventory adjustment, debit $800. I don't have an inventory adjustment account before the old trial balance, but what I have to do there is put $800 in there. So it's $800 for that account, and the inventory account needs to be credited. Now the rule here, if it's a debit and a credit, you take away from another, and if they're the same, you add on. So in this instance I had to take away, and now I put it on. So I've done both of those. So what I'm going to do, this is me ticking it, and that's what you should do as well. Every time you post from the general journal to the trial balance like this, you should just tick it. Provision for doubtful debts, debit $500. In the trial balance, we've got a balance here of $2,000, which is on the credit side. We take it away because they're uneven. Similarly, with the bad and doubtful debts expense account, we were asked to credit that account, and here we've got a debit balance, therefore we have to take it away from one another and end up with $1,500. So I've now done these two, and now we're going to do wages and accrued expense. Wages is there, we've got to add on another $500 because they're the same, and accrued expense hasn't appeared before, that's on the credit side, $500. And you can see down here that it's still balancing, so I haven't done a mistake, which is good. So again, I'm going to go through this laborious process of ticking to make sure that I've done it. Prepaid expense is another account which is new, so I have to type it down there, put it on the debit side for $750. The credit entry relates to insurance. Remember, that's a credit and a debit, therefore we have to reduce this debit amount. You can see that it's still balancing. There we are. Now for the depreciation amounts, I need to debit depreciation delivery van of $3,000, and I've typed it now already. There's the debit, and the credit I've got to add on to this. Remember, there's a credit and a credit, therefore I'm going to add that on. Similarly, for the depreciation, I've got $1,000 there for the fixtures and fittings, and because this was a new asset, the accumulated depreciation account wasn't there, so I'm going to credit that account. I've checked myself, that's okay. I've put all these entries in, and that's the process, and now I'm ready to start doing the income statement and the balance sheet. It's really important that what you've got here, the trial balance, is totally adjusted from your adjustments, and I've done that and it still balances, which is great. So now I'm ready to go to the income statement. The process that I think you should do is, well, you can go two ways. You can say, okay, where are all the items that I need to go into my income statement and start with all those first. Alternatively, you can just go down this list and put it into the right part of the income statement or the balance sheet. You will have a balance sheet and income statement with all the categories there. So this is a legitimate way of posting from here to there and being methodic about it. If I go bit by bit down here, and I'm not going to worry about my calculator until I finish all the way down here, and then get your calculator out, you've ensured that all of these items are in here because they're mixed up. You've got liabilities, you've got assets, they're all mixed up. So that's what I'm going to do, and because I think it's a good procedural thing that you can do to ensure that you minimise your mistakes. So bad and doubtful debts is a financial expense. There it is, $1,500. So I'm just going to put that in there. And again, what I should do is to tick that. I'm not going to do it here on the spreadsheet because it takes me too long, but just for the hell of it, I've got that there, and I'm going to keep going there like that. Mortgage is a non-current liability, $80,000. So it's on the balance sheet, non-current, there it is there, $80,000. It hasn't gone in to it for some reason. Let's just put it in again, see what happens. There it is. Okay, so I've got that one, and I keep working for it like that. Delivery van expense. Delivery van expense is a selling and distribution expense. So let's put that in. So it's a matter of just going backwards and forwards until you've got it all done. Drawings, that goes into the balance sheet as owner's equity. There it is there. Capital drawings down here, drawings $5,000, and so on. Capital 84,000, that goes there. Don't worry about the reference, I'm going to get to that once I've finished my profit. From that one, GST clearing, that's a current liability that goes into my balance sheet. There it is there. GST clearing payable, that was $2,000. Okay, and just ignore these things for the minute because they've got the formulas in there, and when I finish, hopefully it'll all balance up. So I've done those two items. I'm just going to click these off. Now I've got to do sales. Sales goes in the income statement of 66. It goes in here. Sales returns is $500. You can see this is a bit laborious, but it's important that you go through this process. So my COGS, where are they? There they are. They're 22,000. See that I've digressed a bit from what I would normally do. The inventory adjustment is down here, remember, it's $800. It goes in here, $800. So straight away I've already got my gross profit. There's no other operating revenues in this particular example. Alright, so it's important that you keep track of the items that you've ticked off. You can see how I started off the top, and I've just digressed a little bit, but it's just showing you two ways of going. Whichever way you go, you've got to keep track of what item you've posted from here into the income statement or balance sheet. Alright, so I'm going to keep going. Inventory is a current asset, which is up here, $10,000. So I've got that one. Okay, let's keep going. Accounts payable is a current liability that goes in the balance sheet. Over here, accounts payable, $10,000. I've got that one ticked off. Accounts receivable sits in the current assets section of the balance sheet. Let's put it in there. Provision for doubtful debts, I'm going to find that straight away and put it in so I know I've got it done. $1,500. I'm going to tick that one off first. So put that one in. That's $1,500 in here. You can see here that the difference, the provision for doubtful debts, meaning that we think we're only going to collect $13,500, which is a lot more realistic. We've got cash at bank. Please note that it's on the credit side, therefore it goes in as a current liability. So $500 there. Now we've got a whole lot of current assets here to put in. Buildings, equipment and goodwill. So that they all go into here. The next thing is a delivery vehicle that I've got to find. Delivery vehicle is there, 30,000. Tick that off before I put it in. 30,000. That goes in there. I've got to go to the side. I've got to do a subtotal here. So less accumulated depreciation delivery vehicles. That was there. It's 13,000. Let's go and put that in. 13,000. Fixtures and fittings. There it is. 5,000. Put that into the balance sheet. The accumulated depreciation is down the bottom here. There it is. Put that in. $1,000. So I've completed my non-current assets there. You can see that I've gone about a bit here. I'm going to go back to on track. Interest expense and bank charges. They're two financial expenses that go on the income statement. There they are there. So tick those off. Wages, that is a general admin expense that goes in here. Don't forget my adjustment. There it is. I've got to go in insurance. Insurance again is a general and admin expense. So let me put that in. $750 goes there. Tick that one off. Prepaid expense goes into the balance sheet as a current asset. Put that on the wrong column. There we are. That's better. I've got an accrued expense. That is a current liability. Goes there. Two depreciation items. One, of course, it's the delivery vehicle, goes into the selling and distribution of $3,000, and other one is a general admin expense. Okay, let's see where we're at. I'm going to make sure that those things are ticked off. Now let's go and see how we placed. I've got a balance in my net profit account. My net profit is 3,250. Let's see if it balances off here, and you can see that I'm out by $2,000. Now what I'm going to do, I'm going to try and find that amount. The first thing I'm going to do is look for an item for $2,000 that I've missed. Alternatively, I could have put $1,000 that should have been a credit on the debit side. I don't think I've done that. I'm just looking through here. GST clearing. Now let's have a look at that. $2,000. Have I put that in as a current liability in my balance sheet? There we go. Look, and this is the sort of process you need to go through. and I honestly made that mistake, and that's a mistake easy to make. You can see now that it balances, and that's why you have to be really particular about ticking off, and I ticked that for some funny reason when indeed I hadn't. So that's an easy way to make a mistake. So the process, just quickly, you look for the $2,000 either in a trial balance or indeed in the general journal if there's an item there that you have misplaced. You may have made a mistake, therefore you look half that error. So it could have been $4,000, bigger than $1,000. If I put it on the wrong side, then the mistake then becomes $2,000. But most likely, source of error will be adding up, or not putting enough zeros on, or something silly like that. So just check every item that you put into your balance sheet and income statement. And this process I used with ticking off, you can even see there, or saw before, that I made a mistake. So I'm human after all, and that's what you guys will feel as well, especially under exam conditions. So methodic, and make sure that you try and find that balance. Having said that, make sure that you don't spend too much time finding that last balance, because it won't be worth the amount of marks that you probably will gain. Make sure that what I would do is to leave the question, go and do another question, and if you've got extra time, come back and find the error that you've made. If it's only one little adding error, it's just you're going to lose half a mark out of 50. So it's not worthwhile spending that much time, and you can still get an A. Hopefully that's been useful to you. Hopefully you'll get great marks in your oncoming exam. Thanks for listening.